Hello, mic test, mic test. Looks like we are live now. Hello guys, and welcome to the 99th edition of the Trading Opportunities webinar. This is Nirav, and let me just check one more thing before we proceed. Yes, everything looks fine. So welcome to the webinar, guys, and we do seem to have gotten a little bit delayed. If you guys are live and you can hear me, I would appreciate if you can let me know by tapping that in the chat. All right, I'll just check one more time at my end about the audio. You guys are live and you can hear me. Yep, it's working fine at mine. So guys, in that case, let's now actually proceed with the actual webinar. Here's the legal disclaimer on screen. Basically, all content presented here is for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading, investing, or for any other purpose, then you yourselves will be liable for your profit, your loss, or loss of profit. You can also, of course, read the whole disclaimer by pausing the video at this point in time or visiting the website. So with that being said, let's now head over and go through the quick what do you call introduction. So before proceeding the webinar, those of you who are new here, here's a quick introduction, guys. My name is Nirav. I'm the admin and owner of the website 50eyes.com, as well as the YouTube channel 50eyes Market Analysis, where this broadcast is currently being done live, as well as it is also being conducted live on my LinkedIn page, right? So this is a series of webinars. I have calling it trading opportunities webinars, and we have so far conducted, as you can see, 98 of these, and this will be the 99th, which is currently being conducted. In the past 98 webinars, we have captured 212 trades or setups live in front of you guys. And those of you new here, we conduct these webinars every week, Friday at 2 PM GMT or 7:30 PM IST. So whichever time zone you guys are in, just convert it to your time zone and you can join in live in the next webinar as well, right? And lastly, I'm also the author of the book on the subject matter. I'm not sure why it's not loading up here. Generally, it is the banner image on the YouTube channel. Not sure anyways. So I'm also the author of the book, Think with the Markets. You can find it on Amazon. And you can also find the link for it on my website somewhere here. Yeah, book Think with the Markets. And apart from that, I've been keeping a track record of all the analysis that we do here, either as video or webinar since 2016. And here is a spreadsheet which keeps the track of all things that we have discussed so far. In 2016, the accuracy was 83.34%. 2017, it was 87.5. And by the way, you can just scroll through these sheets, take a look at the name of the instrument, the date of analysis, the actual analysis which was conducted, and what happened, the outcome, right? So things that worked, we gave them +1. Things that didn't work, we give them -1. And basis on that, we have calculated the accuracy. As you can see, 2018 again 84.61, 2019 84.88, 2020 88.52, 2021 82.22. And since then, we started doing these weekly webinar series. And by January 17th, we had caught 205 trades. So as I'm telling, we have now caught 212 in the last 98 webinars. So 7 more trades since then. Anyways, the point being that this track record is for 6+ consecutive years, and the accuracy has stayed above 80% plus, which is far above all industry standards, and all is publicly provable here, so you can check at your end. Lastly, if you want to know how I do these things, my way of analyzing the markets, then I do also have a video course which has about 1500 plus students in it. You can check it out by heading to courses, Elliott Wave course, or if you go to the home page, it's the middle link, Elliott Wave video course. Right. I also conduct personalized training classes, training program LT. Might be opening up a new batch. So if you are in my emailing list, you can get the update for it. If we open up new batch, we generally only work in very small batch sizes, 3 people and maximum 5 people. So if you want to get notification regarding the same, you can just subscribe to the emailing list. Again, the link is on the website 50is.com and fill out this form, and that's that. Now, with that being said, now let's head over and start our discussions on this webinar. The way we will proceed is first we will discuss the chart of Euro USD, followed by the chart of crude oil, followed by the chart of gold, S&P's 500, Nifty 50, and in the end, Bitcoin. Right. Every time I have completed a discussion, if you have any doubt, you can just post it in the live chat. And doubts or questions are only taken for people who are in the live chat. Right. So now let me just quickly load up the chart on screen of Euro USD, our first discussion. There it is. Hello, Stefan. Nice to see you here in the chat. Okay, guys. So now before we proceed with the actual current chart, I want to first quickly have a look at what we discussed in the last webinar. That's the way we always proceed. We check what was discussed in the last webinar. So basically, in this case, the 98th trading opportunities webinar, as you can see over here. So let's now see what was being said in the 98th webinar and what happened afterwards. So in the 98th webinar, the view was, let me just make it full screen. So the view was that we were expecting a possible ending diagonal in play in euro. And once the ending diagonal was complete, we would then look for long trades. The idea was that we will see one leg down first and then a move up. That was the main theme. And if we see something like that, we will consider it as a possible long setup because the possible structure of diagonal will be complete, which generally leads to upside movement. Those of you not much familiar with Elliott Wave structures like ending diagonals and such, diagonal is basically this pattern. I'll just draw with the yellow lines here. It's a wedge kind of a pattern with the price contained within it, like this, roughly speaking. Of course, there are other rules and guidelines for it, but that's the rough outlook as you can see here. Lines containing price action, and that's why we were calling it a possible diagonal. Now let's look at what happened afterwards. So here's the actual chart. Our last discussion was done on, let's just check the actual date, 19th January 2024, right? Let's see where the price was on 19th January. 19th will be here somewhere. So this was somewhere where we did the discussion last time. Idea was, as I said, was very simple. One more down leg might be remaining, and after that, we expect longs. Now, what actually happened in the market was that this market actually gave me a long setup from which I had to exit. It was like this. After this discussion, which we can see with this blue line, the market gave a leg up, which I actually considered a possible 4 complete, and then a leg down, which I considered the 5 complete, and then it broke through the trend line, giving me a long setup, which is as per our discussion. Right. However, this long did not play out. The market did go back again down, The idea was that once the market goes above this yellow trend line, we expect it to take support above the trend line and then shoot up. In this case, nothing like that happened. So, of course, I had to close out of this long trade. Right. So, now what is happening? Possibility is that this was still a diagonal. That is, the pattern is still what we discussed last time. However, I'm not very pleased with the way the structure looks. For instance, uh, I mean, it's still a diagonal pattern. That's the main theme still, main idea, right? So although I'm, as I said, not very convinced with this pattern, I have the secondary hypothesis as not relegated yet. So going with the main theme first. So the main theme is still that it is still a diagonal. Once the diagonal is complete, then we look for market to go and establish above the trend line. Once the market establishes above the trend line, let's say take support above this trend line, then we look for long trades, right? So in this case, all of them, that is still supposed to be done. So basically, if I put back the counts, we have this yellow trend line and we want the price to go above it. I have already placed an alert, as you can see with this small clock here at the top left. Once this alert goes off, I will look again to see how the market is behaving above the trend line. And as I said two times earlier, if we can get a support or a retest of this trend line, that will be best case scenario, right? So that's about all for this euro count. I'm currently not holding a position on it, still waiting for this alert to fire, right? As far as the whole count is considered, we are looking at it from this point of reference around 3rd October 2023, and we have considered this as a impulse heading in the upward direction. That's not from that point. One second. So this is the point of reference for this count. We are considered this as the impulse heading in the upward direction, followed by a flat correction, and flat correction in this case we are expecting it to be possibly a running flat. So whenever this wave C of the flat is complete, we expect the market to break through and take out the wave B high, which is this high basically, right? So upside potential is huge if this count is correct. Nothing much to add here. Let's now head over to our next chart, which will be the chart of crude oil, where things have worked out finally in our favor. So let's first quickly check what was being discussed on crude oil chart last time. So here is the recording for the last webinar on our YouTube channel, 98th, and crude oil was discussed around 17 something. The discussion was very short because the idea was the same. Basically, nothing new. The market was still sideways when we discussed it last time on 19th January 2024. And the idea remained that the market can continue sideways movement and fluctuate like this and that. So I'm just drawing on top of the recording. I've paused the recording. So once the whole thing is done for, we will see a upward movement. And if uh, one second, let me just remove the, yeah. So if I play the recording, as you can see here, the idea was that we are looking for a breakout above this yellow box, right? Let me just forward it to see if we discuss anything specifically. No, we then switch to gold. So, anyways, the whole idea was that the market will go higher. The price was 74.329. Let's see the actual chart now. Here's the chart and our last discussion. Let's mark it 19th January, somewhere here. So somewhere here, 94, 74 point something something was our last discussion. The price was somewhere here, roughly speaking, right? And we were long. I was holding a long trade there. I think I've been holding it for 3 weeks almost, right? So, anyways, the idea was that this is the level we look for break to the upside. So it has broken to the upside. I booked partial profits there, and some positions are still being held. That is, some longs are still there. This one was posted in the Slack. Crude oil moving as per analysis. Stop loss moved above entry to 76.3. Free trade now, and profits books on half position. So this was posted in the Slack group. Around 77.376, I have booked half position. And free trade basically means if your stop loss is much higher than the entry, then even if the market hits your stop loss, you will get out in some profit. So that's just something we call free trade, right? And by the way, guys, those of you who are new here, if you are familiar with my work on Elliott Wave, my video course, or have the basic know-how of Elliott Wave, then for the current time being, we have the Slack group open. You can send inquiries by visiting our website contact us page. Again, the link will be in the description as well as it's rotating below the video as well. 50is.com/contact us and mark the subject matter as requesting details for Slack private group. Right. So now coming back to the actual chart. Let's see what's the idea here, what's going on. Actually, it is conducive for some short-term longs like scalp longs I can take here. This looks like it's heading up for the new highs, taking out this high, which is around 77.452. Anyway, so what I was saying was that the current count basically is starting from here. This is our point of reference around 67.872. Right. From this point, we are considering this as a 1 or A. And we have already considered the 2 or B as complete over here. Although that position may change a little bit because it may still be continuing sideways. But anyways, the main idea is that we wanted a break higher than the 1 or A. That's the minimum requirement for ABC correction. So that minimum requirement is already met. That's why I booked part profits. Right now, if this market continues higher and higher, then we, I think, have already marked some upside levels. One is already marked around, what is this? 78.914. Let me check one thing very quickly. There's also one more level we can mark here. So I just want to check that. Give me a moment here. 78.753 is actually the exact level, which is, yeah, a little bit lower than this box. So we are expecting a possible resistance around 78.75. That's the next target. Keep in mind, guys, the target minimum has already been met. So any move further from here should be taken with the trailing stop loss, right? Because sometimes the market will just do the minimum. However, in this particular case, I do not think that's the case. I think in this case, the market has much more upside to show us. That's why I have left the position on. Right, next target 78.75, followed by further upward targets around 80-ish levels. So just let's say for 80 for now, and once the 78.75 level is taken out, we'll just check the things in more detail, because at that point the counts will also be visible more clearly. Right. So for now, this is the strategy. Keep trailing it for next target around 78.75, and then 80, and then even higher levels are possible. The basic strategy is that if the market is seen sustaining above this level, 78.75 level resistance, then only we can see 80 or higher levels. Otherwise, from here, a big sell-off can take place. Maybe in 3 waves, maybe an impulse down, a strong impulse down. So important level to watch out. So nothing much to say here other than that. Just keep holding it if you are already long and already in profit. Keep trailing it depending upon your entry. So that's about that for crude oil. Now let's head over to the chart of gold. And as always, let's first have a look at what was being said on this chart last time when we discussed this chart. So let's pull out the recording here. Here's the recording, and let's check what was being said on gold. Somewhere here. So basic idea was the same, that if the market sustains below this trend line, then we expect more downside activity, right? And the downside levels, as you can see here, were marked 1937, and then even further lower levels were possible, right? So that was the main theme. Let's now check at the actual chart what really happened on gold. So far, the market is trading below it, right? It has tried to go higher. Let me just remove everything. So now if we see, after removing everything, this is the trend line. Here the market tested it. Here it tried to go above it. Here it tried to go above it again. Failed all these times and then shot down, right? So the bearish activity is still there. The whole setup still holds. However, this trend line is getting tested a little bit too much for it to be the exact trend line, but it is what it is, right? Now, what's the analysis? Well, basically no new update here. The bias still remains the same. This is our point of reference, basically the starting point of this analysis. And from here on, we have a wave 1 here, a 2 here, and we are expecting a possible 3 going in the downward direction. Well, if we are correct, then a new leg down can be seen anytime, right? However, the only thing is that in this particular case, we know if the market breaks out above this, what is this level, 2036, then we are wrong, basically, right? So 2036 is for now my stop loss. I am holding shorts actually as of now, right? So I do seem to have a question related to this trend line. Think rejection from trend line over the coming weeks again. Well, I'm not really sure actually, because as I said earlier, also this trend line does not look to be the correct trend line. Maybe this market in these scenarios when a particular analysis is, basically the analysis is done using trend lines, fib levels, and multiple other things. So if one of these things is getting relegated again and again, like for instance, here you can see the market did go and trade above it for a lot of time, and then this one can be neglected, but then again here. So this kind of is a sign that maybe this count needs to be redone, and perhaps this market is doing something completely different, right? So in scenarios like this, if you are holding positions like I am holding positions short here, then a strict stop loss needs to be placed here, which I already have, as I mentioned. So relegation of this count will be around 2036, right? Hopefully that answers your question, Dinch. So as I said, relegation of this downside count is around 2036. If the market goes above it, then I'm definitely going to be out of this market and then reanalyze for what's happening, right? If things work out, then just trade down. So nothing to talk or see or anything there. Downside targets, I think we have already discussed. Just for those who did not watch the last one, 1937, perhaps even lower levels are possible, right? Let me see if there is something else to discuss here. That's about that, I think. A and B up and C down. Yes. Yeah, so that's about that on gold. We have discussed the relegation levels, the downside, possible targets, and let's now head over to our next chart, which will be the chart of S&P's 500, right? So let's quickly load that chart on screen. And this one worked out exceptionally nicely. let's have a look at what was being discussed in the last webinar on S&P, which was conducted on 19th of January. So the first month of January or 2024 year is just about to end very soon. How time flies. So here's the discussion around 34 something. Let's head over to it. Right. So this was the chart we discussed it last time. Obviously, the video is paused. This is the recording from the last webinar, 98th one. As you can see with the arrow, we were thinking that this market will head higher from here, right? And I'm not sure if I head along at that point in time or not, but I definitely had along during the week, and it was closed in, of course, profits, right? So the analysis was basically that we were looking for longs above the last high. That was my setup. How much I have discussed in these 4 or 5 minutes, I definitely must have pointed that, but 2 4 more points maybe other than that. So this was the analysis. Main theme was we are looking for an impulse, wave 3 to be specific, and this was the wave 1 of the impulse up, 2 and then 3 circled is what was forming currently, right? So of course we all know it just blew past, and let's just check on the actual chart. Somewhere here was our discussion, 19th January. Let me just mark the somewhere here, right? Around here we were discussing. So as you can see, the market actually did just blew up from here almost right after our discussion. It just went up and just kept going up, right? So this one played out precisely, like literally from there, it just went up. So we must have discussed some upside targets. I'm not so sure if we had or not, but I booked some profits. Some were left, some were I got out around after using a trailing stop loss and so on and so forth. But let's leave that there and let's see what's really happening right now. Right. So right now we are taking this as our main count point of reference. This is the 1 hour chart, as you can see over here. Point of reference is around the price level of 4668, roughly speaking. Right. And this is our wave 1. And basically, those of you knowing what I'm doing here, I'm just using Elliott Wave patterns, and this is like the most simplest pattern. We are looking for an impulse currently, and an impulse is a 5-wave structure which looks roughly like this. So this is the first leg up called a 1, down leg is called a 2, next leg, which is generally the fastest, is called a 3, followed by a 4 and then a 5. So if this is the 3, then we are currently in a 4, right? And this looks like a possible complex or a flat maybe. Once the wave 4 is complete, we then look for a new leg to the upward direction or in the upward direction, right? So basically the idea is whenever this 4 is complete, let's just assume for once that maybe let's say this 4 was complete here. So from here on, we want to see a break above 4908. That will be the minimum requirement for this structure to have for it being an impulse, right? So that's our minimum target, but it's already trading around 4897, so not much point in that. Of course, short-term scalps and all can be done, right? So other than that, what's the point here? Well, the next point is that this wave 4 may continue sideways a little bit more, right? Generally, wave 4s are the ones which consume more time, right? And in this particular case, you can see wave 2 has itself taken a lot of time, and wave 4 is currently around halfway. So that's why it is quite plausible that this 4 is still continuing sideways. What pattern is it taking? Most likely a flat. What is a flat pattern if I remove this? So flat pattern is something like this roughly. First leg down is called an A. next leg up is a B, and then next leg down is a C. So this will be possibly the A, possibly the B going up, and then the C going down. So in a flat pattern, the wave B can take out the high temporarily for a small move, like it can go a little bit above the A high, right? So that will trigger some long trades. Some breakout traders might enter, and then they will see sell off here, which will trigger their stop loss orders, and then the market will take off for the next leg up, right? Maybe that's happening, maybe not. It does look like that's the most probable scenario. That's why I discussed this at the main theme or the main pattern here. So whatever the case may be, I will be looking for long trades here, right? I have already placed an alert to the upside. I'm currently not holding longs on S&P, right? Although I do think I should take a minor position and then look to build up more longs from here, slowly add more longs. That will be ideal given the current market conditions. But yeah, as I said, no longs for now, wait and watch. And also positional wise, yes, we can look for longs here. Let me see if there are more points. Support wise, we had a support incoming at 4864, which the market has almost tested, as you can see here. This is the line. Let me draw it here for you. Yes. So this is the first support line. As you can see, the market has already tested that, right? And in case it was going to become a zigzag kind of move, then this could have gone lower to 4835, but that does not look to be the case. So yes, the idea remains the same. I believe this will just take out the high for once, come back for a wave C, like a flat A down, B up, and C flat, and then take off to the upside, right? So again, the best strategy will be to add partial longs. I'll just give it some more time and see where I can start building up longs. Although even current state is also good enough. Next thing, where will this count be relegated? I personally believe if the market sustains below this level, 4863, then this is a sign of weakness. So if it sustains below this level without taking out this high of 4809, 4908. So if it sustains below 4863 without taking out the high of 4908, then this is a sign of weakness. And then I will have to look into this count and change it basically. So that's about that for S&P. I don't have anything to add here, other than the fact that if you are liking the content, make sure to hit the like button on YouTube. And even more importantly, guys, I see that suddenly the views have dropped a lot alongside the likes. So if some of you guys were sharing the content, I would request that you continue doing the same. If you are not doing it, then I request that you kindly do it by sharing it on Twitter, Telegram, WhatsApp, whatever place you have of traders group or wherever your trading friends or family members are present. And make sure that you reach at least 5 different social media platforms or 5 different people if you are doing it in person, because we are like almost at the 100. This is the 99th webinar, so we are almost at the 100 and we still haven't crossed the 1000 views mark. So where are you guys? Where is your contribution? I'm putting in the time here, bringing in the analysis. So if you are liking it, then I request that you do your part in helping us reach more viewership and more subscribers. Right. So that's my request from you guys. And let's now head over to our next chart, Nifty, which will be followed by Bitcoin. There's a question or comment here. I think risky as market is already at record high. Companies have not shown good numbers. Yes, Dinch. Lifetime highs generally are the easiest place to get new long trades. Yeah, of course, reversal possibility is always there. But generally speaking, they are the easiest places to find long setups. Anyways, now heading over to our next chart, Nifty 50. Now, when we discussed it last time, let's see what was the outlook on 98th webinar's recording. So here's the recording from the last webinar on screen. This is, as you can see, is the 95th webinar recording. Sorry, 98th webinar recording conducted on 19th of January 2024. And here's the chart of Nifty. Let's see what was being discussed. So I recall very clearly the idea was that either the wave X, let me just play it. So if there's something to show here, we can see. So basically we were thinking that it is possible that this market has more downside remaining and it's continuing as a double zigzag correction. And let me see if I highlight that in the actual webinar. Yeah, there it is. So this was the wave C complete. I paused the webinar. I'm just moving the mouse on top of screen. And the idea was that either the X is complete here or it may still be continuing, but one more down leg is possibly remaining. As you can see with the arrows and everything. And let's see if there was a update to the count here on screen. Yes, one more downside may be there. However, I was not very convinced because it looked quite bullish given the gap up and everything. But that was the kind of the main theme we had with this count. The other idea was that X is still continuing, may have one leg up remaining. 1 second, let me show you where I said that. Yeah, as you can see with this arrow, I'll just pause the video here. With the arrow I just drew a second ago here, that the second idea was that this X wave may have one more up leg remaining, and after that it will fall down. So now let's have a look at the actual chart and see what really transpired in the actual market. So this is the chart. Let's move and see mark 19th January date, because that's when we discussed this market last time. So here is 19th January date. So minor up leg and then correction. It kind of did that, but then the things change kind of drastically, gap up and trapping some long trades, and then the market gave an exceptionally strong down move. So at this point, I have to update my counts, and that's what I want to discuss. So yes, last time count wise, it did go a little bit as expected. The market did give a small up leg and then followed a downward movement. But after a while, it did get relegated. Kind of, it did its own completely different thing after 28th. So only one session it went as per analysis. So I would say not the best. What do you call count, right? And by the way, here's one thing that happened. Market was opened on 28th January, which was a Saturday, and then closed on the coming Monday, which was actually 22nd January. So that was kind of a rare thing to happen, but it's here, 28th January session. So anyways, coming back to the analysis, as you can see here, the analysis basically is being updated to a possible zigzag, which has its point of reference around 22,120 level, which is here. And from here, a zigzag basically is a 3-leg pattern. First leg down, correction up, and then another leg down, right? So here we have the first leg down, the correction up, and then another leg down. Is it complete? Is it still having more downside? Well, at least from a minimum kind of perspective, wave C, which is basically this leg, the minimum it has to do is go lower than the wave A low. As you can see on the actual chart, it has already done that by going lower than the wave A low. So if the market is going to be super bullish, then it has already done the bare minimum requirement, already fulfilled. It can fly from here, but again, the same thing remains. Is it really complete? Is it not just wave X here, which will then be followed by another leg down? So basically what I'm saying is here, if this is an X here, it will again be followed by an ABC down, which is the pattern of a double zigzag and Elliott wave pattern, correction pattern and Elliott wave, double zigzag. So Is it doing the double zigzag pattern? Is it not doing the double zigzag pattern? If not, then it could be complete here and the market can head up from here. So the answer is not very clear at this point in time, right? So the simplistic thing here is that if the market does take out the low of 21,150, then yes, we can say that this market has indeed gone lower and validated the fact that it was an X wave here, and this will now head lower for an ABC like this. So downside, the validation is there. If the market takes out the wave C low, then we will consider the possibility of it moving lower, and I will look for short trades here. Upside wise, things are not clear. 1 second, let me put this alert on. So upside wise, even if the market takes out the high of 21467, it could still be continuing as an X. Like X can become itself quite complicated structure. So I wouldn't say that above the last recent high of 21,483 we can just go blindly long. That's not the best setup. So things remain little bit unclear, and that is something to expect because we have the finance budget incoming in Feb, right? So around that time, the market does become volatile, which it already has become, and it can do things which are unclear, which it is already doing. So we are having a waiting time here till the budget, and around that time, maybe things will become more clear, right? So downside setup I have already discussed. Below this level of wave C low, we can consider the possibility of double zigzag continuing, in which case the A down, B up, and C down will be observed or should be observed. That's the main theme we will have. And upside wise, as I said, it's not very clear. However, I did check this particular count on lower time frame. It does seem to be giving characteristic traits of a flat correction, like A up and then ABC down for a B and then possible up for C. I'm not very convinced about the B wave. It does kind of look oddly placed. So that's why I'm not taking it as the main count here. But again, that also does not give us a very clear setup. Things remain unclear on Nifty basically. And I don't think there is much to add here other than that. Yeah, last thing which I have to point out here is that the possibility of this double zigzag with wave X up and ABC down, we can consider it kind of relegated if we see the market trading higher than 21640. So around this level, if the market sustains above it 21640, then I will seriously consider long trades basically, right? So I know it's not very clear, but that's how the market has been, I think, in the last 2 weeks for Nifty. Intraday wise, yes, some great trades have been there. Like for instance, this last leg up in the last 27 minutes or so, I was able to actually catch it in live market, right? And this was exceptional on options. The contracts went more than 10 times up, right? But anyways, that's about that for Nifty. Unclear still, and wait and watch for now. And let's head over to our last analysis of Bitcoin. And yes, those of you who are watching just the Nifty analysis and they don't watch anything else, I like to point out that if you are liking this analysis, kindly hit the like button and make sure to share the content with your friends and colleagues so that we can have more viewership. Right. So now heading over to our last analysis of BTC or Bitcoin. Let me load the chart on screen here. So there's the chart of Bitcoin. And before discussing what's happening right now, let's quickly have a look at what was being said in the last webinar on Bitcoin. So here is the recording from the 98th webinar, which was conducted on 19th of January 2024, right? And let's see what was being said on the chart of BTC. Somewhere around here, we were discussing Bitcoin. I recall there was a, yeah, there it is, possibility of sell, which was being discussed on Bitcoin. So it's the recording. Let's see. If there's anything else also discussed, I'll speed it up to 2x. Yeah, so that was the main theme. I was expecting at least a small down leg, and the second possibility was, let me just put it zoom. Yeah, second possibility was that it's a impulse down heading for the third wave currently. So overall, both count wise, short term and long term, we were expecting downward movement here on this Bitcoin chart, and as you can see already here, it did transpire like that. Let me just put a vertical line here and show you what we discussed last time. So here's the last discussion. Somewhere here we were discussing the market last time. It did go lower. So our analysis worked out from the last webinar. However, things seem to have changed a little bit. Maybe it's forming a diagonal. Maybe it's still an impulse heading in the lower direction, downside direction. It has become a little bit unclear, I have to say that. So what's really happening? So one theory is that we can consider this as a diagonal, right? However, I'm not liking this big move outside the trend line. It kind of sort of relegates the possibility of diagonal for me, right? So what's the second possibility? The second possibility is that we were expecting a minimum ABC leg down, right? ABC zigzag will look something like this: A leg down, B leg up, and C leg down. So in this case, it is possible that this A leg down, B leg up, and C leg down is already complete, in which case it can now head higher, right? And it can do two things now: either sustain within this box range, which is between the price levels of 38500 or 49220. So that is a big range. So something like that can happen: upside, downside moves. Second thing is it can just shoot up from here. So basically, the upside possibility now becomes visible. However, the second thing or the second count which I have is quite the opposite, right? Second count which I have is suggesting that this is still continuing to the downside. If you want it to take as a double zigzag, then you can just call ABC and then X and then ABC. So it can still not be relegated. However, in this particular case, we do not have a confirmation for any of these setups. Kind of still unclear on Bitcoin, not like the last time where we had a very clear down move setup and we discussed that in live market. In this case, this market is a wait and watch. While the upside possibility is there, I am not going to be interested in it for longs as long as it sustains below 43,000 basically, or actually we can put it to 42,000. Let me see what is the exact level. 42,830 or 840. Let's say somewhere here. So sometimes it takes a little bit of time to show up in the alerts. So only above this level will I be considering possibilities of long. So as I said, wait and watch on Bitcoin. Possibility of sideways within this box range. Right, sideways movement within this box range, and the downward move can also happen. So the downside possibility is still not relegated. So completely wait and watch. No trade for now on this counter, right? So with that being said, we have discussed all the charts which we do discuss in these webinars. And yes, as I said, guys, we are reaching almost the 100 mark. So I would really appreciate if you can put in some efforts and do some sharing of the content from your end. So that's about it, guys. And thank you for staying till the end. Not sure what you have written that for, Hemang, which chart. But anyways, that's about it, guys. Thank you for staying till the end, and I'll see you guys in the next one. Take care.